Good morning, everyone. This is Mike Mentor with your Market in Minutes, and we're looking back on last week, which was October the 30th through November the 3rd. So we closed out October. Hope you guys enjoyed Halloween, and we've got a lot to talk about here. It was a whopper of a week, so let's kind of dive into the numbers here and take a look. And what I mean by whopper is good. Stocks really ripped higher last week. This is pretty incredible. This is I think the best week we've had in well over a year. So all the major indices were strongly positive. And I mean, we had a scenario where basically some indices flipped from negative to positive on the year, just based on last week alone. For instance, the Dow Jones. So very, very strong. We'll get into why that occurred, but you had the Dow up 5%, S&P up almost 6%, NASDAQ almost 7%, and the foreign developed stocks 4.4%. So just strong across the board. I don't have small caps listed here. I might start doing that, but small caps were up almost 8% last week. So it was just a rip-roaring week on Wall Street. So it was fun to watch. So let's talk a little bit about what happened. So obviously stocks popped, so they ripped higher, shaking off the prior week's sell-off, the combination of the Fed's decision to keep rates unchanged, which accompanied dovish comments from Powell, Fed Chair Powell, and a reassuring Treasury announcement on future bond sales sparked 3 straight days of gains, and it was pretty strong. So we had a very slight employment gains and weak manufacturing data. And again, this is providing an additional impetus to the economy, because we need to see these things cool off a bit, which is exactly what's happening. And that's good news for this fight on inflation, and then also for starting to bring rates down sooner rather than later. So the rally continued Thursday following a sharp drop in bond yields that was driven by productivity gains and decelerating wage growth. So when Friday's monthly employment report was lighter than forecast, yields again pulled back, even further, and stocks added to their weekly gains. So just all in all, a very strong week for stocks. Let's talk about the economic side of it a little bit more. So signs of labor cooling. So that was really the big story. That, and obviously, the Fed left rates unchanged. So that was another big one. They met on Tuesday, Wednesday, and announced, of course, on Wednesday, look, no change in rates. So continuing this pause, which is really positive for stocks. But last week's employment data showed potential for a cooling labor market after months of kind of confounding economists' expectations here. It's just been so resilient and strong. I think that was really, it's honestly been a thorn in the Fed's side, but starting to see signs of cooling there. So the first sign was a lower than expected growth in new private sector jobs in October, as reported by ADP, and job openings were little changed. Jobless claims also rose, exceeding estimates. On Friday, the government's monthly employment report confirmed a cooling employment picture, showing an October slowdown in hiring, 150,000 new jobs versus September revised gain of 297,000, and an uptick in unemployment to 3.9%. So all of this is pointing to a little bit of a cooling off labor market, which is exactly where the Fed wants to see things headed in their fight against inflation. So very, very strong week across the board. The economic stats are playing in our favor, so it's all pointing up right now, which is good news. So what's on deck for this week? So we have some key economic data. It's a little light, honestly, in both categories here. Thursday is jobless claims, so we'll be keeping a close eye on that. And Friday, consumer sentiment. So always interesting to gauge how people are feeling about things. So we'll see how that goes. Companies reporting earnings relatively light compared to where we've been over the last couple weeks. We got DR Horton, Gilead Sciences, Air Products and Chemicals on Tuesday. On Wednesday, we have Occidental Petroleum, the Walt Disney Company, and Thursday, Becton Dickinson and Company. And so we will keep an eye on those. But that pretty much rounds out the summary from last week and then what is on deck for this week. So as always, I hope you found that useful, and we will report back to you next week on the occurrences throughout this week. Hopefully we have another big one. Hopefully we can continue this on into December and get that coveted Santa Claus rally, as they say. We shall see. But here's our contact information, and so give us a ring or reach out to us if you have any questions about anything. If you are a client, prospect, we'd love to hear from you. Here's all of our information. Follow us on YouTube if you want. Subscribe to the channel and get all of our videos. But that's pretty much it for the week, folks. I appreciate your time, and enjoy the week, and we'll talk soon. Here's a little disclosure for you. Okay, guys. Thank you.